Hi everyone, it's Stuart here and welcome to our market outlook for 2024 and beyond. I'm here with my five of my colleagues and we're just going to run through some of the major assets, some of our thoughts about what might happen in the next 12 or 15 months. Da-Costa is going to talk about cryptocurrencies. Da-Costa, do you just want to run through it as the first part, and then we might cut to the live, see what the Fed have got to say, see if some live markets as well, and we come back to you after the announcement. I said the announcement is expected no change from the Fed, very much on so, but we'll see how that affects I'll just pull up a dollar chart. So if you run through the crypto winter bit, and then we'll go to the
So so we are going to explore some of the opportunities in the crypto market, ETF market, and that of the stable coin market. And then we are going to start it off with crypto winter. So what's crypto winter all about? Basically, it refers to a prolonged bear market that follows a rapid growth. And from the monthly charts of Bitcoins against US dollar, you can see the market had its rapid growth from 2020 around somewhere $3,000. And then it went to its all-time high around $69,000. And then after that, we saw that prolonged bear market. But as you can see the market recovering from the bear market or the prolonged bear market. And from that, we can say that, okay, there are high chances there's going to be crypto winter is going to be over. But then we need to also know the factors that contributed to the crypto winter from 2021 to 2023. So it was basically attributed to the US inflation and aggressive interest rate hikes. And as a result of that, most investors decided to sell off their crypto assets, and that revealed the over-leveraged problems in the crypto industry. Okay, and as a result of that, it also resulted in a collapse of Luna and Terra USD, which also affected companies like Three Arrows Capital and then FTX. Okay, now there was bankruptcy, regulatory crackdowns, and job cuts in the crypto industry, and that was very serious. But regardless, there are also positive outlook for 2024, and these are the key factors driving it. And the first one is advancements in the accounting. Okay, so the introduction of the accounting rule by the Financial Accounting Standard Board, which is under the generally accepted accounting principles, is also going to pave way for the comprehensive crypto accounting rules, and then also ETFs approvals. Okay, so there's been the spot Bitcoin ETF has been approved, and that has also increased the legitimacy for the non-expert community who also want to invest in the crypto industry. Also, we have tokenized payments where financial institutions like JP Morgan and payment processors like PayPal also adopting the tokenized payments. And as the adoption increases, it's also going to boost the confidence of investors. That's going to draw more of them in there. And then USDT regulatory challenges, where S&P reports USDT as a high-risk cryptocurrency. So the management of USDT also working on that to address that challenge. And when that is addressed properly, it's also going to increase the confidence of investors in the USDT users. So in conclusion, from technical analysis point of view, the Bitcoin has a potential or upward moment, and also consistent in its upward trajectory also suggests that there are high chances of crypto winter being over, and then the chances of its appreciating to its all-time high, that's around $69,000 per Bitcoin. So we're also going to look at that of the ETF. Yes. SWAT plus, yes. ETF. Okay, so ETF basically is an exchange-traded funds, and is a diversified investments vehicle comprising of various stocks or bonds. Okay, and it's also traded on a stock exchange like individual stocks. Okay, now in this session, we just want to look at the ETF momentum, which basically refers to the tendency of ETFs sustaining their current direction. Now, late 2023. There was a bull run for the ETF market, and these are the factors that drove that momentum or that direction. So reassurance in the crypto bull market, like I mentioned earlier, collapse of regional markets, regional banks, impactful Federal Reserve decision, and then the magnificent 7 stocks bull run, and that of the sustained AI hype. So 2023 was all about AI, and from that we feel is here to stay. Yes. But 2024 looks very good for the ETF market. We are going to look at some of the insights from leading investment firms like BlackRock. Okay, so from BlackRock's insights, yes, we're looking at the insights from leading investment firms like BlackRock, and BlackRock, from its insights, indicates a slower growth, higher inflation, higher interest rates, and increased volatility. Okay, then the impact here is that traders need to align with actively managed covered core ETFs. Okay, and from that, some of the ETFs that are considered are JP Morgan Equity Premium Income ETF. Okay, and then insights from Vanguard also anticipates mild recession in developed markets, and also central banks likely to cut interest rates in the second half of 2024. And the impact suggests allocation to defensive sectors. Okay, and some of the ETFs to be considered are Vanguard Consumer Stable ETFs. And also the last one, insight from State Street, recommends a core multi-factor US strategy blending quality, and then it also highlights the insurance industry, tech leaders, and dividend growth strategies. So the impact here is a shift from the general market index ETFs to specialized factor ETFs. And some of the ETFs that are recommended to have a look at are iShares MSCI US Quality Factor ETF. So in conclusion, traders need to take cautious approach to ETF investment in 2024, and also they can consider actively managed covered core ETFs, and dividend-focused strategies. And then we are going to look at stable coins. Yes. So stable coins are cryptocurrencies that are pegged to a reserve of assets like the traditional currencies, and the reason for that is to maintain the stable value, unlike the traditional cryptocurrencies that we know, that of Bitcoin and Ethereum. Cryptocurrencies are stable as compared to that of the traditional ones. And yeah, so 2023 snapshots of stable coins, we can see that USDT dominated the market's trading volume that surpassed that of USDC. Okay, so we can see that USDT dominated from 69.39% as compared to that of USDT, that is 18.97%, and the others were nowhere near 10%. So it tells us that USDT really dominated the markets. Then 2024 outlook for stable coins. We're going to look at the factors that are going to drive them. So increased adoption and transaction volume. So during the third quarter of 2023, the transaction volume of the stable coins were around 5 trillion, and that was a good number as compared to previous years. And also major players like PayPal, JP Morgan also entering the stable coin space. It's also going to accelerate adoption. And then the second point too is efficiency and lower cost. So when using USDT, for instance, in transactions, the fee or the cost attached to it is lower as compared to that of the traditional cryptocurrencies like Bitcoin and that of Ethereum. So that's also going to call in or attract investors in that space, and also rise of lower volatility crypto assets. Now, a lot of investors would want to invest in the crypto space, but due to the volatility, it deters most of them from doing that. And stable coins looks attractive for investment in the crypto space. So in conclusion, there's positive outlook for 2024 for stable coins, and the points are anticipated favorable trajectory for stable coins in the coming year. Also growing significance in efficient transactions, and also lower volatility. Thank you.
Da-Costa, thank you very much. That's stable coins look like an exciting year ahead and beyond. So let's see how it all pans out.
Right.
So final slide.